So we talk about you can see how academics using large data to study the evidence of AI adoption implication for capital market. So we're talking about the industry now. So how industry are using them. So eventually, going down to the point I was mentioned, we want your students to be the middle person, reach the traditional business world and the emerging technology. So that's what our students to stand for. So this is the summary from the overview how the finance industry are using AI. Some of this from SEC report, so you guys can find the original report online. Some is from my own observation. I told you guys I spent a lot of time talking with corporate managers, industry firms, so I have my observation how they're using AI. So this is a summary from both sides, okay? One is official source, one is from my personal observation. So you guys can see that they're using AI for client side. What does client side is? They're using AI to identify who can be the potential client. So, for example, as a fund company, what's the potential is they want a pension to invest in them. They want money flows into the firm, so they can using AI to identify the client. And also another thing AI can help is to manager to develop like a bot for clients. So before they have to hire 10 people to kind of manage a client relationship, but with AI, the bot can answer a lot of questions for potential interested investors. So you can see that one interesting point is they are using on the client side, they're using AI to either identify new clients or using AI to help to manage a client's relationship. This is one thing. Another one is called the investment side. What does investment side is? As an investment company, a lot of main purpose is for stock picking. How to choose the right stocks, right? And maximize the profit return from the stock picking. So they are using AI to doing that. And also, but there's an interesting observation is you cannot completely rely on AI, because if you just AI AI choose the stock and the machine trade on it, sometimes there's some sometimes compliance issue, legal issue, and risk. So what the normal practice in industry is, AI will pick the stock and the human verify to see whether the stock picked by AI is have a red flag or not. So you can see the interesting pattern. So where like a human is not completely get wiped out from the picture. So AI will do the first screening. We call it the positive screening. And the human will do what? Will do negative screening, which means AI will pick up a stock, and the human will rule out the stocks that AI picked with risk. So this is on the investment side. You can see that AI will use to select stocks, and the human will be a gatekeeper to make sure doing the negative screening to make sure the picked stocks are right. So there's a lot of application in investment industry. So, and also portfolio and risk management. So what does that mean is portfolio management is whenever AI pick up one stock, if you add on to the current portfolio, you will increase the risk. So the team have to make sure, I have 10 stocks. If I add another stock, the 11 stocks maybe crash my portfolio because the correlation between their returns. So they have to make sure the whole portfolio is solid, it's balanced. So this AI can help doing that job as well. So you can see that for a lot of investment company, people are doing is using AI to choose stocks and using human to be the gatekeeper, negative screening, and using AI for portfolio and risk management. And so many of them, I'm not talking about hedge funds. A lot of like aggressive hedge funds, they don't have the human side. They have the AI automatically pick up stock and trade in a millisecond trade on it. So I'm talking about like very big size, like more of a, large asset management or middle-sized asset management. I'm not talking about the particular hedge funds because they are different. They're different, game player in the market. They are just, you guys know hedge funds. They just go AI. They don't have human as a gatekeeper. They want to maximize the speed. And so this is something you guys, once you finish the course, you whole get taste. You maybe become one of the portfolio manager using AI if you understand all the data well from this course. And then, so I talk about the client side. I talk about the investment side. So what's the operational side? What does the operational side means? you use that for AI to kind of help with logistics. So one good back office is what? Accountants, right? So you need accountants to do all the bookkeeping and keep the record. So what we need is AI can help you guys to do that. So AI can help with the accountants to kind of make your job easier. And these are the three things I was talking about. So using AI to identify clients, support the clients, AI using to identify stocks, and human has the gatekeeper, but not apply to hedge funds. Using AI to do the operational side, to back office, make a back office more efficient. So what does accounting people do? What kinds of accounting people do in AI? So like a lot of people are talking about finance, right? Finance industry. What accounting people do? There's three things accounting office are doing, and I'm doing this kind of executive training for some of the firms. One thing is financial reporting. So they're using AI to generate this kind of numbers in automatic way, give you earnings, give you the estimate of bad debt. So AI can help with the financial reporting. That's the number one use case right now in accounting firms and even for the private sectors. So what's the second one? It's called budgeting. So a lot of the accounting office at Microsoft, at Apple, one big job of accounting office is to do budgeting, like how much money they give you to R&D, how much money they give you to HR. The budgeting is a big deal for the accounting office, and they are using AI to do that, trying to help people to give the optimal budgeting, like how to allocate the resource among the divisions. So AI is doing that. The third one is risk control. What does risk control means? Sometimes some people just maybe travel too much money, and sometimes the invoice is not correct. The AI can help to detect like abnormal pattern in the invoice, and also some like risk factors associated with the employees or some data. Because the firm, interesting point is the accounting office at all company is the data center. You guys are amazing, okay? So if you work on Microsoft, if you just do the programmer, you actually don't have all the data. Who has all the data from Microsoft? The accounting office. They have all your paycheck. They have all your budgeting. They have all your travel expense. They have everything about the Microsoft employees. Even as a programmer, you don't have that data. So the accounting office is the data center for all the companies. And then how you use the data to identify the abnormal patterns. That's very important. That's what they are doing right now. So by using all the data assembled to the accounting office at the different companies, they can use that to identify, did you abuse your travel, right? Is the meal too much for the ordinary benchmark? Or someone is travel to like high risk countries? All this stuff. And operational wise, they can internally detect like ex-ante risk factors. They can identify this. So the accounting people are using that at the financial reporting, budgeting, and risk controls. So these are the accounting firms. But I can tell you guys, everyone is doing very preliminary stage. Like I talked to these companies, they are just thinking about it. I haven't seen any company saying, Sean, we are all in. Let's do it. Everyone just talking and thinking about it. This is the direction they want to invest, but I haven't seen any really substantial actions so far. But that's an opportunity for you guys. That's an opportunity for you. You want to go ahead before the game. If everyone already started, there's nothing to do with you. But they are trying to do this. They haven't made their mind. But you are the first players in the game. So this is for the accounting people. So what is the regulator's point? Like I presented at SEC. I also did a talk at the regulator forum. They asked me opinion how to regulate AI. So this is from regulator's point. So there's several points the regulators want to point out. It's also from the report, not my personal opinion. So one thing is they want appropriate governance of AI. So that's the one. So how to do AI governance? One thing they want to staff with sufficient knowledge. So one risk is human. So if you hire the wrong human, if you have wrong talents, you may use AI in the wrong way. So control the talents. That's the one control the AI risk. And the second thing is they want the model training to be robust, to be everything. So and the third one is transparency. Like they want the investment companies to disclose how they train a model, how they build the data, how to do that. This is you guys know this is a dilemma, right? All these investment companies, why they want to disclose how they train a model? If they disclose too much, competitors will copycat. It will hurt their returns, right? But at the same time, if they don't disclose, regulators are concerned. What if you are doing something crazy? What if you are introducing risk to the market? So you can see that there was never right or wrong answer, right? So, but I want to give you guys the debate. What is in the regulator's mind? They want the governance. And they want to focus on governance on the talent side to make sure they are using the right people. They want the governance on the model side, make sure the development, everything is right. They want the governance on the disclosure side. They want the firms to disclose how they do that. But nothing is straightforward. Some of these one come with the cost. And this is what in the forum I talked to several senior regulators. What they concern is if U.S. too heavily regulate AI, and then other countries will catch up, and then the U.S. will lose the edge on the AI games. So that's what they worry about. So there's a appropriate governance. If you over-regulate, you will deter people to develop AI. If you down-regulate, people will using AI for risky project. So what's the balanced regulation? I don't know. No one knows. We'll figure it out. But this is some of the overview of what you can see, what industry are using, right? You guys can see for investment companies what they're doing, for accounting firms what they're doing, and what's regulators' mindset, right? What's the mindset? So this is some of stuff you guys can write down, right? So, so this is the 4 steps middle-sized investment companies are doing. So step 1 is they select stocks using AI. Step 2 is they use a human to negative screening, make sure the selection is solid. And step 3 is they do the risk control. They want to sure the newly added stock does not hurt the whole portfolio. The fourth one is execution. Execution means what? Means when you trade the stocks, when the volume is large, they're too expensive to trade, right? So you see the model right now is you want to cut the big order into small order and you trade it to minimize the transaction cost. If you put like a $2 billion buying the stock and then you would jump up the stock price and make it too expensive. But if you cut down the trade into small orders and you secretly trade the orders, then you will not have a big price impact. You make your trading cheaper. Does it make sense to you guys? Makes sense to you guys. So these are the 4 steps people are using AI. They're doing right now. This is not AI. It's a traditional middle-sized investment company are doing this. Select stocks, human verify, make sure risk is okay, and minimize the trading costs, right? This is what we're doing. So what are people doing right now is using GPT. What they can do is they are trying to using GPT to help with right now the second step. I told you guys, right? Machine predict stock and human verify. Now they want to machine predict stock, machine verify. That's what the trend I'm seeing right now. And also risk control. Before human make sure there's no risk to portfolio. Now AI is to make sure there's no risk. So you can see that there's a change of game right now. So you can see that before human is the gatekeeper of machine. Right now they're trying to use machine as a gatekeeper for another machine, right? So this is what they're doing right now. So and also the AI risk control. So people using the AI as the control for the risk, the portfolio. So what's the benefit of here? Benefit is the labor cost, right? So I can tell you before, like normally on the middle-sized team for the gatekeeper is about 10 to 15 fundamental analysts, 10 to 15 fundamental analysts, and each one paid about $250,000 on average. So you can look at the numbers. So if you have the team like that, you talk about $3 million expense every year to pay the salary, right? To pay the salary. But with the AI, they can downsize to 1 people. So that's a huge cut for a lot of middle-sized companies, right? This is another also for the risk control is a big thing for the investment company. They have to make sure the portfolio risk is solid, like I said, right? And before they maybe have 5 people, most of it is 5 people for the risk control, but they can cut to 1. So you can see that the AI, what AI can do is they can reduce the cost, labor cost, and they can help with the business expansion, right? They can expand the business without hiring more people, right? Without hiring more people. So the question is, will you be the only person left? Let's say 1 people left. Will you be the only person left, or you are to be the person who actually get replaced? So that's the dynamics. I want you guys to be aware of, right? So this is the kind of trend on the industry right now. They are before Before they use human to gatekeeper machine, now use machine to gatekeeper machine. So how exactly they can do that? How exactly they use the machine to gatekeeper machine? The trick is because over the last many years, the human have the notes. You guys remember earlier the machine pick up stocks, right? Human will write the notes on which is the risk, which stock is risky, which is not. Human has wrote in the notes to analyze the red flag of this AI picked stocks. Because of the notes can help the machine to train how people are thinking, how people identify red flags. And then because of the notes, we can actually use the notes to replace human because we understand how people are thinking using the notes. That's how we do it. Does it make sense? So before we cannot do that because we don't have the notes. We don't have the analyst notes on which stock is risky, which is not risky. We don't have that. But once we have a long-term data on the notes, we can do that. Same as the risk control. And earlier, AI cannot replace human because we have human has to make a judgment to control risk. But the risk team, they have the notes. They said, okay, doing this will control risk. Doing that will control risk. Because all the notes, the machine can learn from the notes, and then eventually we don't need more human. We just use the notes to mimic the human thinking, and we can replace a lot of the teams or help with the expansion. So essential points you have to need is what? Is the data. Without the notes, the AI will not do the job. The key point here is two things. One is the powerful large language model. That's one thing. You need a powerful large language model. Second one is what? You need the notes from this analyst who already wrote down their thinking, logic, reasoning. With these notes, with the large language model, we can mimic the analyst reasoning, and we can mimic the gatekeeper analyst. So that's why AI can do the job. So you guys can see two important factors. One is the powerful model. Another one is the powerful data. We need both in order to make AI to work. I hope hope the point is clear. I hope the point is clear. So how about the manufacturing? Like we are talking about this kind of sometimes I don't want to my staff just focus on too much on the accounting firms, finance firms. How about the manufacturing? So how do manufacturers using AI? So one thing they are using AI is to identify clients. They're identifying clients. They're using AI to identify clients. They're using AI to identify internal risk. That's a lot of manufacturing firms are doing that. Again, how do they do that? They have the notes from their sales team. So basically, from notes, what the notes they have? So they have the notes saying they reached a certain customer is successful, and they reach another list of customer. It's a failure. They don't respond. So they have the notes on which customer respond, which customer don't respond. With that data, we can use that data to train which customer were more likely to be a potential partners. You can do that. Does it make sense? So again, going back to the earlier points, you need the data. You need the notes from this sales team to know the successful case and the failure case. You need both. Now, you cannot just learn from successful case. You have to have a successful case, notes for successful case, and a notes for failure case. You have the both. You can use the AI to train for it. So you can see that not just for accounting and finance, not just for accounting and finance. I think for the manufacturing firms, they're using the AI to kind of identify potential customers and identify internal risk. But the essential part is what? It's the notes the sales team have, because the sales team have to write down what's the successful case to identify clients, what's the failure case. With that notes, machine can use that to identify clients. So budgeting, same. So let's say take an example of Microsoft. Microsoft last year they did a very bad budgeting. So now we have notes on that. People wrote down, give the R&D, give GPT $10 billion, give the Outlook $1 billion. They have the budget allocation, and then they have the performance evaluation. This budgeting not working because the GPT need more money. They have the evaluation of the budgeting. They have the budgeting, and the machine can learn from it. Machine can learn, okay, with that notes, machine know next year maybe they should give the OpenAI more money and blah, blah, blah. So with the notes of the budgeting and also the performance of the budgeting, the AI can learn from it. So this is what industry are using right now. So you guys can see that AI can do a lot of stuff, right? Not just pick stocks. AI can what? do the internal control, can do identify clients. AI can also do, like what I said, do the budgeting. But the key idea is what? We need the data. Let's say if the budgeting team, they didn't keep the notes, like in the past 20 years, they didn't note, like in the year one, how much is the budgeting allocation and how successful is the budgeting. If the team didn't have the notes, there's no way AI can do it. So a lot of companies ask me, Sean, we don't have the data. What should we do? The answer I normally give is, do it now. In 5 years, you can use AI. So that's the trick. So if you don't have data, that's fine. Do it now. Accumulate 5 years, and then you can have the data to use AI. So this is essential for AI to work, right? That's why a lot of study we talk about today is about the data. And what's the key benefit? Key benefit here is what's the key benefit? One is, with the example I gave to you, is you are not just using large language model. You use large language model with your own data to answer your firm's specific questions. That's what we want to have you guys to be aware, right? And another one is privacy. So if your data is private, never use GPT. If it's GPT, you upload to the prompt, GPT has all the data, you will be in trouble. If it's private data, you have to use open source, Llama. Llama will be the one. You can do the Llama locally, and then you use the data. So you have everything control in your local computer and local clusters. So these are the two summarized I want to give you guys. So basically, just have the large language model is not enough. You have the large language model, you have your unique data and your unique needs. So you can use large language model to train your own firm data to get what you want. That's number one point I want to give you guys. So this is you have the new data, and fine tune the data with your own data. So that's why this course we focus on a lot on the data. We talk about conference score, blah blah blah. We talk about all accounting data. We focus on data. So this is number one. You not just need a large language model, you also need a domain data. The second thing is the privacy. If you have a privacy, make sure you don't use GPT. Okay, you make sure you're using open source Llama if you have a data privacy. And so this is the future. I feel like we have to learn AI to survive, and so this is the basically